Alright everyone, welcome back to the channel. Today we're diving deep into something you've all been asking about, trading. You see those flashy headlines, right? Teenager makes millions from his bedroom, or this one crypto coin will make you rich. It's super tempting, I get it. The idea of your money making more money while you sleep, or while you're out grabbing a $2 coffee, that's the dream. It's the allure of financial freedom, of not being tied to a desk, and maybe, just maybe affording that slightly nicer apartment without eating instant noodles for a month straight. It's powerful stuff. But let's be real for a second, is it all hype? Can you actually make serious money trading Forex, stocks, and crypto? The short answer is yes, absolutely, and this is a big but, it's not a get-rich-quick scheme. Sorry to burst that bubble if you thought it was. It takes work, it takes learning, and it definitely takes a bit of smarts. Think of it like building any other skill, whether it's learning to play an instrument or becoming a pro gamer. You don't just wake up one day and become a rock star trader, you gotta put in the hours. The good news is, it's more accessible than ever before. You don't need a fancy finance degree or $1 million to start. You can literally begin your trading journey from your phone, maybe while you're waiting for your iced coffee order. That's the amazing part about today's world. The barriers to entry are super low, which means the opportunity is there for pretty much anyone willing to learn the ropes. And trust me, learning these ropes can genuinely change your financial future, allowing you control over your income in ways a traditional job just can't offer. So, if you're curious about how this whole trading thing works, how you can potentially unlock some serious wealth, and what secrets the pros use, you're in the right place. We're gonna break it all down, no confusing jargon, just straight talk. We'll look at what to trade, how to trade it, and a few of my personal tips to help you get started on the right foot. Make sure you stick around because this could be the video or essay that kicks off your journey to financial independence. And hey, if you get some value, smashing that like button is always appreciated. First things first, let's talk about what we're actually trading. It sounds complicated, but it's not too bad once you get the basics. Think of it like this. You wouldn't buy a car without knowing if it's a sedan or a truck, right? Same idea here. First up is Forex, which is short for foreign exchange. This is all about trading currencies. You're basically betting that one country's currency will go up or down against another. So you might trade an American dollar for a euro, hoping the euro gets stronger. It's a massive market, the biggest in the world actually. Next we have stocks. This one's probably more familiar. When you buy a stock, you're buying a tiny piece of a company. Think Apple, Tesla, Amazon, those big names. If the company does well, its stock price usually goes up and your piece becomes more valuable. If it doesn't do so well, the price can go down. It's like owning a very, very small slice of your favorite pizza place. If they sell more pizzas and make more money, your slice is worth more because the whole pizza is worth more. It's about believing in a company's future success. Then there's the wild child cryptocurrency. Bitcoin, Ethereum, Dogecoin, you've heard the names. These are digital or virtual currencies secured by cryptography. It's newer, it's definitely more volatile, meaning prices can swing like crazy, but the potential rewards can be huge. And also, the potential for losing your shirt is also there, so tread carefully. It's like the exciting, unpredictable new ride at the amusement park. Some people love the thrill, others prefer the merry-go-round. No judgment either way, just know what you're getting into. Finally, let's touch on indices. An index is like a basket that holds a bunch of different stocks, usually from a specific sector or market. For example, the S&P 500 tracks the performance of 500 of the largest US companies. So, instead of picking individual stocks, you can trade the overall performance of a big chunk of the market. It's a way to diversify and bet on the general health of an economy or industry. Think of it as betting on the entire league instead of just one team. It can be a bit safer and gives you a broader view. Alright, now that we know we can trade, let's talk about the core idea behind making money in trading is incredibly simple. You've heard it a million times. Buy low, sell high, that's it. That's the secret sauce. You want to buy an asset, whether it's a stock, a currency pair in Forex, or a cryptocurrency when its price is low, and then sell it when its price is higher. The difference between your buying price and your selling price, minus any small fees, is your profit. It sounds almost too easy, doesn't it? Of course, the tricky part is knowing something is low and it's going to be high. If it were that obvious, we'd all be billionaires sipping iced coffee on a yacht. This is where strategy, research, and a bit of patience come in. You're essentially trying to predict the future movement of prices. Sometimes you'll be right, and sometimes you'll be wrong. The goal is to be right more often than you're wrong, and for your wins to be bigger than your losses. It's a game of probabilities, not guarantees. Think about it like flipping items you find at a garage sale. You spot an old lamp for $5. You have a hunch that with a bit of cleaning, someone online might pay $50 for it. You buy it, buy low, clean it up, list it, and sell high. Your profit is $45. Trading is similar, but instead of lamps, you're dealing with financial assets, and instead of a garage sale, you're using a trading platform. The fundamental principle remains exactly the same. Identify undervalued assets and capitalize when their value increases. This buy low, sell high concept also works in reverse, which is called short selling. This is a bit more advanced, but basically you borrow an asset, sell it at a high price, hoping the price will drop, then you buy it back at the lower price to return it, pocketing the difference. It's like selling a concert ticket for $200 that you will be $50 by showtime because the band isn't that popular. You sell high first, then buy low later. For now though, let's focus on the classic buy low, sell high. Master that and you're golden. Okay, let's get into the good stuff. Actual strategies. Remember, no strategy is foolproof, but these are some solid approaches. One of my favorites, especially for stocks and crypto if you're in it for the long haul, is dollar cost averaging, DCA. This isn't about timing the market perfectly, which is nearly impossible. Instead, you invest a fixed amount of money at regular intervals, say $100 every month, into a particular stock or crypto. Sometimes you'll buy when the price is high, sometimes when it's low. Over time, it averages out your purchase price. Why is DCA so great? Because it takes emotion out of the equation. When the market dips, many people panic and sell. With DCA, a dip is a good thing. Your fixed $100 now buys you shares or coins. It's perfect for building wealth steadily without stressing over daily price swings. For example, if you put $100 into Bitcoin every month for the last 5 years, regardless of the crazy ups and downs, you'd likely be sitting on a very nice profit today. It's the slow and steady wins the race approach, and honestly, it works. Another popular strategy, especially for more active trading, is support and resistance trading. Imagine a price chart. Support is a price level where an asset tends to stop falling and bounces back up. Think of it as a floor. Resistance is a price level where it tends to stop rising and falls back down like a ceiling. Traders look for these levels. They might buy near a strong support level, expecting a bounce, or sell or short near a strong resistance level, expecting a drop. It's about spotting patterns. For example, let's say a stock consistently bounces off $50, support, and struggles to get past $60, resistance. A trader might buy when it gets close to $50, placing a stop loss, in order to sell if it drops too much, just below $50. Their target would be to sell near $60. This requires looking at charts, which we'll get to. It's more active than DCA, and there's more risk if you get it wrong, but the potential for quicker profits is there. Just remember, these levels can break, so risk management is key. And hey, if these strategies are making sense, give that like button a quick tap. Section 5. Chart power. How pretty lines can make you rich. You've heard me mention charts, and for a good reason. If you're going to trade, especially anything beyond super long-term DCA, you need to get comfortable looking at charts. They're not as scary as they look. A price chart is simply a visual representation of an asset's price over time. The most common type you'll see is a line chart or a candlestick chart. For beginners, a line chart is super easy. It just connects the closing prices over a period, showing you the general trend. Is it going up, down, or sideways? Candlestick charts give you a bit more information within each candle. Each candle usually represents a specific time period, like a day or an hour, and shows you the opening price, closing price, high price, and low price for that period. Green candles usually mean the price went up, and red candles mean it went down. It sounds like a lot, but once you get the hang of it, they tell a rich story about buyer and seller behavior. For instance, a long green candle might show strong buying pressure. So, how do we use these charts with strategies like support and resistance? Let's say you're looking at a stock, and on its daily chart you see the price has hit $45 3 times in the last month and bounced up each time. That $45 level is acting as strong support. You might then decide to buy if the price approaches $45 again, hoping for another bounce. Conversely, if it keeps hitting a ceiling at $55, that's your resistance. Charts help you visually identify these key levels and patterns, which is way easier than just looking at a list of numbers. Learning to read basic chart patterns like uptrends, a series of higher highs and higher lows, or downtrends, lower highs and lower lows, is fundamental. If you see a clear uptrend, the general strategy is to buy during a small dip within that trend. If you spot a downtrend, you generally avoid buying, or if you're more advanced, you might consider short selling. These visual cues are incredibly powerful. Don't be intimidated. There are tons of free resources online to learn chart basics. Seriously, a little chart knowledge goes a long, long way. Section 6. Knowledge is king. Why your brain is your best trading tool. I can't stress this enough. The most important asset you have in trading isn't your starting capital, it's your knowledge. The markets are constantly changing. News events, economic data, even a tweet from someone influential can send prices soaring or tumbling. So, you absolutely stay informed. This doesn't mean you need to be glued to financial news channels 24/7, because who has time for that? But you do need to have a general understanding of what's happening in the world and how it might affect your investments. For example, if the Federal Reserve announces they're raising interest rates, that usually impacts Forex markets. The US dollar might strengthen, and can also affect stocks because borrowing becomes more expensive for companies. If a crypto project announces a major new partnership, its coin price might jump. Being aware of these things helps you make more informed decisions and avoid getting caught off guard. Think of it as doing your homework before a big exam. The more prepared you are, the better you're likely to perform. So, where do you get this information? There are tons of great resources. Reputable financial news websites, official company announcements for stocks, and project white papers for crypto are good starting points. Follow trustworthy analysts and educators online, but always be wary of anyone promising guaranteed returns or secret information. Nobody has a crystal ball. Your goal is to gather information from multiple sources and develop your own perspective. Don't just blindly follow someone else's trades. That's a recipe for disaster. And this learning process never stops. Even seasoned traders are constantly learning, adapting their strategies, and staying updated. The market is a dynamic beast. What worked last year might not work this year. So cultivate a mindset of continuous learning. Read books, watch educational videos like the ones on this channel. Hint, hint, maybe subscribe if you haven't. Join communities and discuss ideas. The more you learn, the more confident and hopefully, the more profitable you'll become. Your brain is your biggest edge. Section 7. Trading perks. Living the dream without the 9-to-5 grind. Now let's talk about the fun part. The potential lifestyle that successful trading can unlock. This isn't just about numbers on a screen, it's about what those numbers can do for your life. One of the biggest appeals for me and for many others is freedom. Freedom from a traditional 9-to-5 job, freedom from a boss telling you what to do, and freedom to work from pretty much anywhere in the world with an internet connection. Imagine making your trades from a beach in Bali or a cozy cabin in the mountains. That's a powerful motivator. It's also about financial independence. Successful trading can create an income stream that isn't tied to trading your time for money. Your capital can work for you, even when you're not actively clicking buttons. This can mean paying off debt faster, saving for a down payment on a house, or just having more breathing room in your budget. Maybe it means you can finally afford that dream car you've always wanted, or take that amazing vacation without worrying about the cost. It's about having choices and less financial stress. Of course, it's not all Lamborghinis and private jets overnight, let's keep it real. For most successful traders, it's more about a comfortable lifestyle, financial security, and the ability to pursue passions without being solely dependent on a paycheck. It might mean being able to spend more time with family, work on a side hustle you love, or dedicate time to hobbies. It's about achieving a work-life balance that truly works for you, not one dictated by an employer. That kind of quality of life improvement is priceless. And let's be honest, there's a certain satisfaction that comes from mastering a complex skill like trading and seeing it pay off. It's intellectually stimulating, and when your analysis and strategy lead to a profitable trade, it's a great feeling. It builds confidence. It shows you that you can take control of your financial destiny. The journey itself, the learning, the strategizing, can be incredibly rewarding, beyond just the monetary gains. It's about personal growth and empowerment. And who doesn't want more of that? Section 8. Stay ahead of the game, keep learning, keep earning, and smash that like button. So, you're excited, you're seeing the potential, and you're ready to learn more. That is fantastic. But remember, the journey of a trader is one of continuous education. The markets don't stand still, and neither should your knowledge. New strategies emerge, market conditions change, and new assets become popular. Staying curious and committed to learning is absolutely crucial if you want to achieve and maintain success in this field. Don't ever think you've learned it all, because that's usually when the market teaches you a new, expensive lesson. Think of your trading education as an ongoing subscription. You need to keep renewing it by seeking out new information, refining your skills, and adapting to new trends. There are so many ways to do this. You can follow reputable financial educators, and if you're getting value here, hitting that subscribe button and the notification bell really helps you stay updated with new content I put out. Read books on trading psychology, technical analysis, and risk management. These are pillars of successful trading. Another great way to learn is to review your own trades. Keep a trading journal. Write down why you entered a trade, what your strategy was, what happened, and what you learned, whether it was a win or a loss. This self-reflection is incredibly valuable. You'll start to see patterns in your own behavior, identify mistakes you keep making, and pinpoint what's working well for you. It's like watching game replays to improve your performance. Don't just focus on the profits, focus on the process and the lessons learned along the way. And finally, don't be afraid to experiment, with small amounts of money especially when starting. Try out different strategies on a demo account first, or with capital you can truly afford to lose. See what resonates with your personality and risk tolerance. Some people are cut out for fast-paced day trading. Others prefer the slower burn of long-term investing. Finding your niche and continuously honing your craft within that niche is key. The more you learn and adapt, the better your chances of consistently earning will be. Section 9. Your financial future starts now. Ready to make moves? We've covered a lot today, from understanding what Forex, stocks, and crypto are, to basic buying and selling principles, some actionable strategies like DCA and support resistance, the importance of charts, and why continuous learning is non-negotiable. We even touched on the awesome lifestyle perks that successful trading can bring. It's a lot to take in, I know, but hopefully, it's given you a much clearer picture of what trading is all about, and how you can potentially make it work for you. The dream of making money from the markets is real, but it requires dedication. The most important takeaway should be this. Trading offers incredible opportunities, but it's not a shortcut to instant riches. It requires effort, education, and a smart approach to risk. Don't jump in blindly expecting to become a millionaire by next week. Start small, focus on learning, and gradually build your skills and your capital. Remember, even a journey of 1,000 miles begins with a single step, and your first step could simply be opening a demo account to practice, or reading your first book on trading. The power to change your financial situation is more accessible than ever before. You have the tools, you have the information, especially if you keep following channels like this one, and now hopefully, you have the inspiration. Don't let fear or a lack of knowledge hold you back from exploring this path. The potential rewards, both financially and in terms of lifestyle freedom, are genuinely life-changing for those who approach it correctly. It's about taking that initial leap and committing to the process. So, what's the next step? Start learning. Pick one area that interests you. Maybe it's stocks of companies you like or the basics of crypto. Open a practice account with a reputable broker, and most importantly, keep that hunger for knowledge alive. If this essay has sparked your interest and you found it valuable, please do me a favor and smash that like button. It really helps the channel. And subscribe for more content just like this, breaking down complex financial topics into simple, actionable advice. Your trading journey starts now. Go get 'em.